Building a good credit score will help you in the future when you want to obtain loans for bigger purchases, and specifically if you're planning to actually get your mortgage in the future and buy your own home, the property where you're going to live, or perhaps even a property for investment purposes, which you then can rent and make money from that. Simply said, if you have a good credit score, you can get a better loan terms and lower interest rate, so it is worth it to build your good credit score. Now, by now you can have your poor credit score, or you perhaps never thought about building your credit score up to now. However, it's never too late to start. And if you are in that situation right now that you don't have any credit score built, or your current credit score is very low, you can use financial services which are provided by the companies which are called credit builders. Credit builders are literally companies, financial services providers, which will give you and allow you to actually use their credit cards. However, the credit cards are more safe. Let me explain. Most of the credit score builders actually work with secured credit cards. That means that the secure credit card actually works with the balance you already put on the card. And like this, it will help you to actually build that credit score, because that's the whole point of the credit builder card. It helps you to actually improve your credit score. That means that you are not going to get yourself again into a debt, which, if that would happen, that once again would decrease the credit score that you currently have. So the credit score builders will provide you with a credit card which is secured. The secured account is actually opened easily in just a few steps, and you will need to transfer the money to that account at first. That's why it works this way, that it's a secured account. So you are actually transferring your money to that account before you start purchasing on that credit card. So the money you will add will be kept as your money, and they will be available to spend on your card. When you make a purchase using your credit builder card, the financial institution from which you have that credit card will actually deduct the purchase, the actual cash which you bought your, let's say, new TV, and this cash will be deducted from the amount which is available to spend on your credit card. So like this, you will actually won't spend more than you have, and that's why this account is called a credit secured account. At the end of the month, the financial institution where you have your credit card will calculate your monthly spending, will then deduct the amount you spent on your card from the balance which is available, which you transferred when you open the account. And at the end of the month, they will actually allocate this money to the amount which you spent, and they will prepare the report. Yes, they will also create the credit report, because this is the way how you're going to start to build your good credit. So when you're building your good credit, the report which is prepared over time will focus on the main points, and that's the payment status literally, and how well you were doing to cover your credit balance over a certain period of the time. You will have the report on the amount past due, which is the amount of the balance which was not paid off from the previous month. However, this is the amount you want to avoid to have on your report, because this is the amount which would be your debt amount, and that would decrease the credit report. Then there would be the report on the length of your account being open, so for how long have you had the account, and the current balance which is spent since the last statement. So this is the credit report, which is literally prepared by the credit builder on a monthly basis. And if this credit report actually gets into a plus number, so that means that you are paying your credit balances well each and every month, you didn't get into credit card debt and you had that account open for at least a couple of months, let's say 6 to 8 months, you already building your good credit score. The